Hi, welcome to the market alert for Wednesday, the 16th of July 2025. So, semis and CPI spark surge in big tech, and the dollar, bullion, Bitcoin, and bonds dumped. Small caps slammed as mega cap techs melt up continues. So, CPI numbers were up yesterday. US stocks were mostly lower after an acceleration in US CPI numbers. The US CPI data was untimely mixed, but showed an acceleration from the prior, including a 0.7% increase in the core goods numbers as well. Bonds were hit, dollar was bid as CPI reports showed tariff impact. So the tariffs, according to the news, is already starting to impact. So we'll just have to see how this continues going forward. Plus, that show is not over yet at all, because obviously 1st of August now is the date when they come into effect. Economic news, like I say, yesterday the CPI year on year rose to 2.7. We know all these numbers are complete and utter nonsense. It's fantasy land. The numbers are far higher than these, but this is what is officially reported. We've got CPI coming out month on month. That stayed more or less the same, but it was an opportunity for the markets to pump the dollar and slam the metals, which we'll look at in more detail shortly. But first, let's kick off, have a look at the stock markets, and kick off with the Dow. So in the Dow, yesterday the market was down on this pressure. It's the third day now we've got red bars. That's because the market's closed below the 5-bar moving average. It's actually closed below the 20-bar moving average, but there is a bit of support to the left if the market can hold. As I've said for the last few days, that we can expect some weakness because of the tariffs, waiting for them to come into effect. Not major sell-offs, nothing like it was before, just a steady pullback in prices there. So yesterday the market was nice and steady until we had the CPI numbers. Then the market moved lower, which you can see there. Obviously no threat of rates going up. Trump is desperate to get rates down. So again, obviously the market not responding to this too well, because they want to see a decrease in rates, not a continuation of the status quo where rates remain unchanged and have done for some time. Actually, I don't think we've had a cut since Trump got in. If there is, it's only one. So again, as it's shown in the charts there, the market down a bit at the moment with the tariffs, and also this is just going to add more weight to downside pressure. So in the German DAX, the market currently holding above the 20-bar moving average, but only just. Market has some support below if we do take out the 20-bar moving average and yesterday's low. That level is 23,794. In the 30-minute chart, again, you see the market was sideways waiting for those CPI numbers, and then moved down with the release of the numbers from 130. Overnight, the market is sideways to lower, but watch a close below the low and yesterday's close. We'll see the market move down and test the 23,794 level. In the S&P 500, obviously the all-time high was made yesterday evening. Well, actually, it's not yesterday evening. It was Monday evening, overnight session. And that was the high for the day as well, as it were, as it rolled over from midnight. Market still sideways there, still looking strong, maybe the semiconductor sector and Nvidia, etc. But the market showing a bit of a pullback there. Like I say, that all-time high. Actually, the all-time high wasn't. It was actually during the trading session. I got that wrong. You can see there. So the all-time high in the of 63.01 was actually made during the cash market session there, which you can see. So I thought that was weakness after that, but not the case at all. So is that the same for the FT100? Let's have a look at the 30-minute chart first. No, the overnight, it was the all-time high for the FT100, which moved down most of the day and is stuck in a sideways move. Goodness knows why this market's up at this level, but it is. And you can see yesterday the market bumping into Monday's high, and then prices sideways before breaking down with those US CPI numbers. And overnight to the market too, also looking at the close and the low, in the market needs to hold at these levels. In economic news today, we've got the UK CPI numbers. They're going to be out at 7 a.m. They're forecast to remain unchanged. Incredible, but there you go. We'll say no more on the matter. US dollar obviously buoyed by yesterday's numbers, coming out higher than forecast. That means that there's always the potential for a rate increase. If there's a rate increase, it's positive for the dollar. Given the tariffs as well at the moment, the dollar's having a good run back to the trend to the upside, as you can see, then actually probably breaking out to the upside as well, which of course is putting pressure on the metals, but they're holding well. So let's have a look at those. So silver hammered down yesterday, but finding a bit of support overnight, having traded up to $39, which you can see there, 39.11. This market is having a bit of a consolidation. Some consolidation there. We got 39.11 all the way down to yesterday's low. It's a volatile market, that's for sure. We're down $1, around about $1.50, somewhere in that region, just a bit more. But finding support there and trying to move up. Now, a few months ago, given the opportunity, they would have absolutely slammed the silver market. There's no doubts about that with this sort of news. And they've not managed to achieve it. So this is a positive for the metals. 30-minute, you can see, well, we have the LBMA and then you get the smash as well. Market managing to stay above the close there, but it's a given. Given any opportunity to slam the silver price, it will be slammed, and that's exactly what we saw yesterday. Meanwhile, gold is consolidating, still stuck in a sideways move. 30-minute chart sees obviously prices being hit because the prospect of a rate cut is off the cards for the time being. But overnight in Asia, the market has found support at the close of yesterday. Right, let's have a quick look at the gold-silver ratio. And in the gold-silver ratio, this trying to move up as gold holds its own and silver gets moved lower more aggressively than the price of gold. So moving up a bit there at the moment for the gold-silver ratio. Right, let's have a look at yesterday's trades. So during Tuesday's session, the market rallying up in the pre-market, then moving back down to the high of Monday. And then from there, we see the market finding support down at the close and then managing to make its way back again. You can see how it traded down to the close. Everybody thinks, great, put your stop below the recent low. It gets taken out and then they move off without you. So you've always got to make sure there's a decent stop. Unless the market started moving to the upside. So there we see prices making their way up. We then had a potential sell, of which the market didn't fill. Prices then moved higher once more, and then got stuck, as you can see there, and then put in a short with a bit of buying coming in, also at that 50 EMA as we saw earlier as well. Prices then find a bit of support, but then straight through, and ready to start trading and waiting for those US CPI numbers. So let's just whiz through to those numbers. So you can see there the market gapping up as the news comes out, up to the high. Market fills the gap, and then we see prices moving sideways to lower, then coming back above the 200 MA, back to the high of the previous day, Monday. They always want the markets back above the high if they can. We then get the start of the Dow session, market moving down with the Dow without weakness, but you can see how the DP then becomes a bit of a support level for the market as prices then start to go back to the upside but run into trouble at the 50 EMA. They then come back to the DP where there's buying, which you can see there. There is a potential sell signal, which the market fills, and then in order to move sharply lower, we've got to break through this, which we then see prices doing exactly that. It takes a lot to break the support. It also takes a lot more to break the DP level. But prices managed to do this, and you can see they're going into the evening. Prices then just settling down into a sideways move. And overnight prices are sideways to lower. Looking at the close and the low of yesterday is probably where the market is likely to go and test first. We're a long way off the high, which you can see is several hundred points away there, 300 in that sort of ballpark region. But at the moment, prices just remaining sideways. Like I say, you've got to watch the close and the low today. Right, so that will do it for this one. Let's see how today unfolds. And with that, thanks for watching. See you in the next one.